the economic backdrop for the chip. So I would not be surprised when Nvidia drops earnings if we see a pretty substantial decrease in the shares here, as also when we look at insider buying. Welcome back in, investors. Today we're going to talk about Nvidia, as they just reported earnings, and they are one of the largest semiconductors produced in America. The first thing we notice is top line revenue growth coming in extremely strong, especially since 2021 had an explosion from 10.9 billion to 16.6 billion, all the way up to 26.9 billion, and in the trailing 12 month is pushing nearly $30 billion in top line revenue. Along with developing graphic processing units, or GPUs, which is mainly used for gaming, Nvidia also develops system on a chip SoC for the automotive and mobile computing markets.
More mixed after this, and the reason is just the magnitude that this business has hit the wall. It's quite remarkable. Last year, the business grew at 60%. For their October quarter, they're guiding for a 17% decline. That is about as big of a slowdown as I have ever seen. And the reason, of course, is because gaming, they're flushing out inventory. Gaming is code for crypto, because that's where those sales go through. And so this is part of the hangover of crypto. And the piece that has shifted, and some of the traders have been commenting regarding this too, it's rare when you see these big slowdowns. It's rare that the business bounces back in a subsequent quarter. I think
and with the drop off of video games, crypto mining, GPUs seem to be less needed nowadays, and it's going to be interesting to dive into their quarterly report, as this one could get hit pretty hard. And Nvidia is definitely one of the bigger players in this game. In this video on Nvidia, we are going to go over their financial report and try to figure out a fair market value price to pay for this company. So let's get into it. By the way, if you're new to the channel, consider subscribing and smash that thumbs up. When we compare Nvidia to its peers, it definitely trades for a premium, an extremely high premium, but for good reason, as Nvidia is definitely outpacing the competition. The sector median is growing revenue roughly 18%, while Nvidia is pushing 36% revenue growth. Now, forward revenue growth is getting a little bit closer here, where Nvidia is now only pushing 23% revenue growth versus sector median of 13% revenue growth. So maybe it does not demand as high of a multiple as it's getting right now. We all know that the semiconductor industry has taken a massive hit over the last year, as the SMH has traded as high as $318 and as low as $166 in the 52-week range. Currently trading at $217, so has rebounded extremely nicely off of the recent lows, and that's why we've been seeing the big rally in semiconductors. But the outlook for semiconductors is still shaky, as inventory levels are high and the consumer is definitely in question. Now, when we go to tipranks.com, oh, and by the way, guys, if you want 10% off of TipRanks, I highly recommend using it. We're going to go over a few things in TipRanks that I find very valuable. So click the link in the description, get 10% off, sign up for TipRanks if you are an active investor. Definitely nice to have the insider's information. As we can see here, pretty wide range for Nvidia on the 52-week. As we stated before, semiconductors have been a very volatile area to be invested in, and currently trading at a 54 PE ratio. As I stated before, I think this is fairly elevated when we think about the economic backdrop for the chip. So I would not be surprised when Nvidia drops earnings if we see a pretty substantial decrease in the shares here. As also when we look at insider buying, Director Mark Stevens, who made an informative sell on Nvidia of roughly $10 million last month, might know something that we don't. So just wanted to bring that to your attention, as you know, the stock price dipping today is obviously concerns about the earnings, but we also see here that there has been insider selling. When we look at analyst forecasts, we have a moderate buy on the stock with 30 ratings, 22 buy, 8 hold, 0 sells, and a pretty wide range of stock prices here, anything from 133 to 320. Even by Yahoo standards, we have it overvalued by double digits here, roughly 12% overvalued. Now, I never go off of Yahoo standards, but we can see here that even Yahoo thinks that this stock is expensive. When I take a look at Nvidia's chart, it is pretty clear that it is in a substantial downtrend that has yet to be broken. And where you want to see it break, you basically want to see it break out of this wedge over here. And that's going to be anything above $182. So if we get a break and a close above 182, I would say that would be a bullish move. Now, the problem is from a technical standpoint, the recent move from a 108 to roughly 160, that 60% move almost, is getting exhausted. And we can see here RSI is definitely oversold and pointing down, and the MACD starting to flatline and get exhausted. So with the insider selling and with the chart setup, I tend to believe that the path of least resistance is going to be down in the stock once they drop earnings. So we have a miss on EPS and a hit on sales, as sales came in at 5.93 versus 5.77. I would say that this is somewhat of a mixed earnings report here, and I think the stock will probably settle back to where it was in the 150s. We'll see what happens here, but let's start plugging in some of this analysis here. All right, so we know that the report wasn't as bad as the street was expecting, but we're going to give that a few minutes to settle out here, as when we look at the 3 months ended, revenue has come down, cost of revenue has went up. When we look at it from a 9-month perspective, guys, it is very unimpressive here. Gross profits actually coming down. So even though the market's responding good to this, I'm looking at this as pretty stagnant. I'm looking at this as you're paying a premium right now, as we saw with the PE ratio and comparing it to its peers, you're paying a premium for growth. And as we can see here, the growth looks to be flatlining. And as we stated about GPU slowing down could be a massive reason why. The other thing we're looking at here is gross profits are actually coming down for the 9 months, even though the top line revenue growth is coming in a little bit stronger. So when we bring it into a per share basis from a GAAP and a non-GAAP perspective here, we can see that in 2021, they were doing much better on both GAAP and non-GAAP measurements of EPS. And we look here and it was pretty flat quarter over quarter, but then we get a non-GAAP 51 cent versus a non-GAAP 58 cent. And when we bring it into a free cash flow standpoint, we get a negative 156. Net income is very disappointing when we look at it from a quarter over, when we look at it from last year's third quarter earnings going from 2.4 to 600 million. That is a big disappointment in my opinion. As a shareholder, I'd be pretty upset with that. Pretty significant jump in stock-based compensation as well. Net cash provided by investing activities was 3.1 billion, and for the 9 months ended, it was 7.3 billion. So they are making up on investments. And they're expecting Q4 revenue to be around 6 billion. So we're going to start solving for the valuation of the company right now, which is basically only going to give them about 5%. So I'm basically only giving them about 5% revenue growth over the next few years. Now, what I want everybody to understand is I'm personally being very conservative here to protect my butt. You guys have to understand that the chip makers are in a very, very interesting situation if we head into a recession in 2023. And what did we just see with Nvidia's earnings? They are actually flat. So with that being said, I'm going to just use 5% revenue growth over the next couple of years, stating that they're probably dealing with inventory problems. They're probably going to deal with a slowing consumer. So I'm building some safety in there. From years 3 through 6, I'm going to bump it up to 9% revenue growth. Now, guys, this is a very, very dangerous stock. Extremely high, 37 EV to EBITDA versus the average in the sector of 13. AMD trades for a 21 EV to EBITDA. I feel very comfortable using an 18 to 20 EV to EBITDA, so that's what we're going to do. So factoring in the margins and factoring in the flat growth, I get a price target of roughly $61 with a 2030 price target of $182.50. So this means that this stock, unfortunately for me, is not going to be a buy for a very long time. And the problem is that it's trading for a very, very high multiple, and I don't think it deserves this multiple, as these earnings that came out today show me that that revenue is kind of flatlining here, and there's definitely concerns going into next year as well, and that there could be more pain ahead for the chip makers. Now, if I throw the average EV to EBITDA on the company, which is right around a 30, it's basically a $91 price target for me. Maybe we can meet in the middle at a 25 EV to EBITDA. So basically, guys, I get about a $70 price target for this company, which means it literally needs to get cut more than in half. Is that possible? Well, in this market, I think there is a chance that it could happen. But as always, guys, this is just my opinion. Hopefully you enjoyed my dive into Nvidia. And as always, we will see you next time, investors. Peace.